Good morning. Welcome to the morning brief. Today is Tuesday, April 7th. What's going on from forexfactory.com news? Well, 8:30 we had core durable good orders that came in better than expected at zero point 0.8 versus zero point 0.5. Durable good orders, which includes everything they don't take out, 1.7 to the down, 1.4 to the downside, and expected was negative 1.1. So I always get this question, core versus durable goods. And core means they pull out things like energy, food, things that are volatile, and they just pull them out. Where durable goods, when it's the non-core number, it's everything combined. So this is really the true number. This is what economists like to look at because it smooths the line or the chart out by excluding very volatile stuff. So yeah, I totally ignore the core number and look at the durable good order, and it is negative, worse than expected. Going forward here, 12:35, we've got FOMC member Goolsby speaking at 3 p.m. Consumer credit month over month. 4:30 p.m. we have the API weekly statistical bulletin. 5:50 we have FOMC member Jefferson speaking, and that is it for the day. So moving on, looking at some charts. You see here from the daily, we are developing a bull flag. So there's the flag, there's the sideways action of, I should say, there's the flag pole, and there is the flag itself moving sideways. We had an update yesterday on very poor volume. I'm not sure what's going on there. I almost want to think that might be some sort of mistake. That being said, looks like very, very poor volume. Today, looking at a gap down, where can we go? Well, if we break out of this, which would be the expectation, bull flags break to the upside in a bull market. We are in a long-term bull market, a medium-term down market, a short-term, very short-term, we're up. So there's the situation there. We just broke this upper trend line. We are still below the moving averages. If we get going to the upside, there is a low volume node that is at 66.93. That's very, very close. I think that'd be easily broken. Maybe go back all the way to this high from the 23rd of March, and that high volume node right there at 67.55 would be a decent amount of resistance. So there you have that. Moving on to the inventory. What do we have? Positive price action, positive inventory. Those are correlated. That's the way it's supposed to look. So just say there, all good. Looking at the overnight action, approximately 65 points. 65 points, and you can see that it is all over the map. So yeah, we started out at 66.60, went all the way down, created a low at 66.09, and all the way back for a new high, then all the way back for a new low. So the market just doesn't know where it wants to go. That is absolutely positively for sure. So where do we have support and resistance? Well, support and resistance above. So we have resistance above. You can see right there some confluence, 66.78, 6,700, the whole number, 67.04, 67.20. If we get up a little bit higher, 67.42, and there's a decent amount of stuff up in the 67.60 area. That would be resistance. Support, on the other hand, we have some confluence right here at the overnight low, 66.01. Of course, the whole number right there, 6,600. We break below that, got 65.74, 65.66. That red line there is the previous day's low. Break that, it gets really ugly. Maybe all the way down to 65.42. Hopefully we will not have to go far down. Stock Trader's Almanac for today is 57.1, 57.1% chance the market will be up today from the Stock Trader's Almanac. Hope you have a great day. Remember to subscribe and like. See you tomorrow. Hey, thanks for watching the morning brief. Check out my website for more information, oneononetrading.com. Take a look at the Troy levels, a trade location finder for the futures markets. Help you find those levels of support and resistance that are just so hard to find. I also do personal coaching and mentorships. So go ahead and take a look at my website, oneononetrading.com.